You're watching EAC News. Thanks for joining us. Let's have a look at today's finance. The CXX index is currently 505.29 points down, 1.43 points or 0.28%. The daily exchange rate is 4,061 real to the US dollar. Now let's have a look what else is happening in finance around the world. Global equity markets rose on Monday on signs of the easing of the COVID-19 pandemic-related and other restrictions by China, and investors took an expected interest rate hikes in coming days in their stride despite crude oil hitting $120 a barrel. The dollar gained against the euro ahead of the European Central Bank policy meeting on Thursday, but risk and appetite abated after being higher early in the day. Sterling rose ahead of the confidence vote in the Parliament and Prime Minister Boris Johnson won. Diddy shares closed up 24.3% after early surging more than 50% on the journal report. The news earlier helped Hong Kong's Hang Seng Tech Index close 4.6% higher. The major US stock index rose and did the big bounces for the Britain, Germany, France, Italy and Spain, all closing 1% higher. The Pan-European Stock 600 index rose 0.92% and the MCIS's gauge, the stocks across the globe, gained 0.35%. On Wall Street, the Dow Jones Industrial Average fell 0.08% after briefly dipping lower. The SP 500 gained 0.20% and the Nasdaq Composite added 0.25%. Growth shares rose 0.3% or more than doubled at 0.1% advance in value stocks. US Treasury yields rose as the market prepared for the sale of $96 billion in debt this week ahead of the data Friday, expected to show US inflation is still running hot. The Consumer Price Index is expected to have gained 0.7% last month compared to 0.3% in April, with the annual inflation unchanged at 8.3% according to median estimate of economics. 3 US debt auctions this week are likely to push higher yields higher as banks and investors prepare to absorb the insurance. The yield on the 10-year Treasury notes was up 8.5 basis points at 3.040%, the first time the benchmark yields have topped 3% in almost 3 weeks. At the ECB meeting on Thursday, President Christine Lagarde is considered certain to confirm the end of the bond buying this month and the first rate increase in July, so the jury is out on whether it will be 25 or 50 base points, as some investment banks ramped up their expectations. Money markets are priced at 130 base points at a rate increase by year end, with the 50 base points moved to single meeting fully priced at the October. A high number and only with expectations of an aggressive tightening by the Fed next week, with markets already priced for the half-point increase in June and July and almost 200 basis points by the end of year. The dollar index rose 0.274%, with the euro down 0.23% at $1.69.4. The yen weakened at 0.73% at 131.85, and the sterling rose 0.32% at 1.2528. Oil prices were largely unchanged in a choppy trade, buoyed to Saudi Arabia raising its July crude prices, but amid doubts that the higher output target or OPEC plus producers would ease tightly supply. US crude futures settled down 37 cents at $118.50 a barrel, and Brent fell 21 cents to settle $119.51. Gold prices slid, pressured by the uptick of the dollar on Treasury yields. US gold futures settled down at 0.4% at $1,843.70 an ounce. Asian stock markets edged lower on Tuesday. The yen hit a 20-year low and bond markets wavered. Investors nervously awaited US inflation figures and the central bank meetings in Australia, Europe and the next week, the United States. The 10-year Treasury yield rose 9.9 basic points overnight and hit 3.0580% early in Asian session. The move has pulled the dollar higher and poured cold water and initial optimism about China's emerge from COVID-19 lockdowns. The dollar added another 0.6% against the yen on Tuesday to touch 132.75 in the highest since 2002, as the Bank of Japan is astounded Lagarde with the rest of the world moves to try to hit inflation hard with interest rate hikes. The 10-year gilt yields rose as far as 10.2 base points to a 7-year high at 2.256% on Monday. The MCIS broadcast index of Asian Pacific shares outside Japan fell 0.8% as Hong Kong's market, paired by some of Monday's gains to Japan's Nikkei, inched up 0.3%. Markets are pricing about 3/4 of a chance of a 40 base points hike that would bring the cash rate at 0.75%, and the analysts advise that the magnitude could bring the Aussie dollar with it. The Aussie dollar wobbled at 0.4% lower to 71.69 cents in the morning trade against. The euro was pushed 0.2% lower and below its 50-day moving average to $1.677, but kept up further losses by nerves about the possibility of a rate hike or a hawkish tone from the European Central Bank, which meets on Thursday. Bitcoin rose 5.2% to $31,441.76 at 8 o'clock on Monday, adding $1,552.78 to its previous close. The world's biggest and best-known cryptocurrency is down 34.8% from the year high at $48,234 on March 28th. Ether and coin linked to the Ethereum blockchain network rose 3.17% to $1,862.14 on Monday, adding $57.16 to the previous close. That's the latest news on finance. Tune in tomorrow for more.